Gentlemen, good morning. Great to have you here. Bill, I'm going to start with you. We had you on just a few days ago. You don't believe that tariffs are inflationary, but I want to ask you, after this action we've seen in the markets, what do you think these tariffs mean for the broader economy?
It means that it's going to be very costly to restructure the economy the way President Trump had promised he would. He was elected to say, we're going to rebuild the American economy in a way that allows more domestic production, shuts down the level of imports, and rearranges supply chains to make the supply chains more secure. And this is going to take quite a bit of surgery. Just to extend his medical metaphor, when a cardiac patient with atrial fibrillation is discovered, the cardiac surgeon and doctor will give them Coumadin, which is rat poison. And you know, rat poison can kill somebody in the wrong dosages, but in the right dosages and administer it as a part of a therapy package, that can be very healthy for the patient. And the therapy package that we need is lower taxes, smaller government, and fewer regulations. It's really critical to get the entire package together in order to allow the economy to restructure itself in a way that improves domestic income and employment and also reduce the level of imports. Reducing the level of imports by itself can actually grow GDP because you have domestic purchases much more than you do foreign purchases. And in terms of inflation, the reason why we had inflation when supply chains were disrupted under COVID is because we had a stimulus package that put so much money into people's hands, they would bought no matter what price. Right now, when people are faced with higher prices, they can buy fewer of the high-priced stuff and more of the lower-priced stuff, which is domestically produced.
All right, so Bill, again, you seem to have confidence in this tariff plan. Peter, I want to come over to you. We're seeing a lot of big banks raise their odds of a possible recession. What's your view on the tariffs? And does the idea that there are some potential deals that can be made, at least according to the president, does that change your view on the impact of the tariffs on the economy? The markets, it's obvious, deep sell-off, but the economy?
Well, you can't separate the markets from the economy, because one of the major pillars of economic growth over the last couple of years has been upper income spending. Those people have been benefiting from higher stock prices, higher home prices. So the decline in the stock market alone can slow upper income spending and raises the odds of a recession. Also, government spending has been a major support to economic growth. And now we have a plan which I think is laudable over the long term, but is potentially painful in the short term, and that is to slow government spending. So while I think it's JP Morgan that has 60% odds of a recession, I think now with this decline in the stock market having the impact, as I mentioned, on upper income spending, that percentage, I think, is going to be much greater.
So, Peter, you seem to be pro the cutting of government spending, but what do you think about this approach when it comes to trade deficits that the president's taking, when it comes to tariffs and try to reduce trade deficits? What's your view on that?
I think it's terrible policy. To me, having a trade deficit is just a byproduct of global trade. And yes, we do want to manufacture more things here. Yes, we want to knock down overseas trade barriers, but a trade deficit in itself is not a negative. I went out for dinner last night. I paid the restaurant money. I got a good meal. I technically have a deficit with the restaurant. Walmart has a trade deficit with China, but Walmart happens to be the largest private sector employee in the United States. They've benefited from that trade. I've benefited from buying stuff there, as has many people here. So the belief that a trade deficit is inherently bad and needs to be fixed, I think, is a flawed economic concept.
All right, so you see it as a flawed economic concept. Bill, I want to come back over to you. I'm just looking at the headlines right here. We're hearing from the German minister, or German economy minister this morning, talking very tough about these tariffs and saying that the EU needs to stick together. While you may be pro many of these Trump administration policies, are you pro the idea that we're going to stand firm on these tariffs, at least seemingly from the president, unless there's a deal made? I mean, we're seeing a lot of opposition and quote-unquote countermeasures. How do you see that impacting the ability of the U.S. to do business overseas and also of many of our multinational companies?
Peter's absolutely right to say that overall deficit is a sign of a healthy economy because it shows that we have the capacity to spend. The question is, where do we spend it? And that's what President Trump's trying to switch. He's trying to switch away from a lot of our competitors and toward countries that could be our friends and have more investments coming from those other countries. And now, in terms of your question of the European Union ganging up together and saying we're going to have to resist these tariffs, I think the rational thing for them to do is gang up together and come negotiate negotiate with us in a way that lowers the tariffs. And they want to preserve the U.S. market for their exports because the U.S. is the largest economy in the world that buys stuff, and they don't want to lose that. So I think it's in their interest and our interest to negotiate lower tariffs. And that's exactly what President Trump is asking for. The tariffs will go down if you come and negotiate lower tariffs and non-tariff barriers. It's not just tariffs, remember. What's hurting our exports are all the regulations and legal hoops that our companies have to run through in order to sell abroad.
I mean, that's certainly the administration's argument. Peter, I'm going to come back over to you. Looking ahead, what does this all mean for the Fed? We get CPI later this week. We're going to get another read on inflation. In your mind, what does this mean for the Fed, their decision on May the 7th? The president has often talked about lowering rates. Do you think that's the direction we're going in when it comes to our central bank?
The Fed is frozen here. Let's just say they start cutting interest rates because they're worried about a recession or rising the unemployment rate. And then the next day, Trump decides to take these tariffs off and he comes to all these deals. Then they're over their skis with the rate cuts because maybe then the economy starts to improve again. I think they're frozen in time here. I think that whereas a period of time for decades, we were so used to the Fed coming to the rescue and trying to cure any of our economic ails through rate cuts and QE, I think they're much more limited in their ability to react. And I think those that are relying on the Fed to somehow save the day, I think it's misplaced faith right now.